Puppies or kitties, but it just feeds into that whole vicious cycle.
For sure.
Should we?
Yeah, no, after, we have 2 dogs, I think, at least for a while, and they're gone. So that's enough. We got a toddler now, he's completely resident.
So,
We'll probably wait long enough to where you can ask to one of them. What's up, my friend?
Yeah.
My grandson,
Oh, really?
he's a full partner.
No kidding. Congratulations, that's awesome.
Yeah, I'm pretty close.
Yeah. Down good. Up on. Oops. I guess I should probably grab a agenda so I know what I'm talking about. When I wing it, I tend to forget things. Careful, Todd. Okay, good afternoon, everyone. It is 4:45 by the clock in the back of the room, and we will begin the City Council work session here on Tuesday, May 3rd, 2022, 4:45 p.m. in the council chambers. Calling the meeting to order. Angie, would you please do a roll call?
Nestle,
Here.
Tryon, Bowles,
Here.
Lucas,
Here.
Garrett,
Here.
Harmon,
Here.
Weaker, Woods.
It's here.
Thank,
Gee, they can't tell time.
let the record show that Mr. Reeker wandered in.
There's more.
And Mr. Woods as well, okay. Open Meetings Act. A current copy of the Open Meetings Act of Nebraska is posted on the wall at the back of the council chambers, roughly above the police chief's head at the moment. No formal vote or action will be taken at this meeting. Again, no formal vote or action will be taken at this meeting. Of course, beginning at 5:30, we will have a regularly scheduled city council meeting, and it's possible we'll vote on something there. Okay. Right now, we will move immediately to presentation by Marcy Luth of Almquist and a bunch of other people, PC, on the 2021 City of North Platte audit. I'm trying to give Marcy as much time as possible because I had to cut her short last year. So Marcy, it's all you, go for it.
Super, thank you so much. Glad to be out here again this year and have a chance to review your audit report with you guys. We have a couple of things that we'll go through tonight. One is the audit report, but then also there's a 2-page benchmarking spreadsheet, which I think really takes a lot of the numbers. You know, you have about a 100-page audit report. The benchmarking helps pull that into a 2-page summary that's really a little bit more digestible. You can compare it to where you've been historically, as well as compare it to where some peer group averages are running. Okay, so just to start out, I want to mention the bound audit report. The audit opinion is an unmodified opinion. That's always what you want when you go through an audit. And so that's what that one says. I'm going to start out referring to the 2-page benchmarking spreadsheet, and Don's passed a copy of that out to all of you guys. But just to remind you, there's 5 years of historical information shown here. So 2021 is the audit that we're talking about, and then you can see the prior 4 years information presented. Under the recommended column, it's either kind of a rule of thumb benchmark that we feel is a good ratio to achieve, or some peer group averages. So when I talk about peer group, I'm talking about 12 other cities over 10,000 in population. You know, they start to get quite a bit divergent when you get over 10,000 population in Nebraska, but we did take 12 that we felt were most comparable to this size, and so you can have some averages from that. Also on this report, there are page numbers that reference back to the audit report, so if you want to see where some of this information is coming from or how we're calculating it, we've tried to refer back. So starting out here, you can see we've got your valuation listed. Your valuation per capita increased a bit from where it was last year, but you guys do run slightly below the other peers that we have in this. They run about 71,000 per capita on valuation. You guys are at about 69,000 per capita. The first item there we have is your unrestricted net position compared to your total net position. So here we're talking about equity. we're talking about how much is unrestricted in that it's not tied up either in capital assets or restricted for some donor or legislative purpose. Okay, and what we see here is we would recommend having somewhere in that 1/3, somewhere between 25 to 40%, depending upon what fund type we're talking. You can see that you guys are a little bit below that in all categories. So your unrestricted, or what we feel is the most flexible liquid equity that you guys can pivot and do with as you want, you run a little bit lower than where we would like to target. You can see that decreased in all those categories a bit compared to the prior year. Now, some of this means, your equity is not necessarily down, but you guys receive some grant funding that's sitting in restricted at the end of the year. So you'll see your bottom line net income in a lot of your governmental funds is up, but a lot of those have restricted purposes. You guys receive some ARPA funds and some significant grant dollars that have to be used for certain purposes. Okay, as we move forward, item number 2 looks at your top 5 revenue sources, and this is on the governmental side of things. And again here, we look at it on a per capita basis. And what you see as you look back historically is you guys are up per capita in all of those categories compared to where you were last year. You also run a bit ahead of your peer groups in those categories. What we saw across Nebraska this year, sales tax per person was up. And I think that's a combination of things, but one, I think the state is just doing a better job of capturing sales, online sales, and the sales tax on that, and that's become a much more popular channel. And so we're seeing sales tax increase across all jurisdictions, and you guys are no exception. But as you just run down that, you can see increases in all that, which is great for the governmental side of things because it's hard to generate revenue on the governmental side. So we saw those revenue sources increasing. Item number 3 looks at state allocation, both your highway allocation as well as your municipal equalization. And here you'll see that your highway allocation increased a bit, runs a bit ahead of your peers, but your municipal equalization, while it increased, still runs below your peers. And so this indicates that your general fund levy is not quite up to where those peers average, and so the state does not give you as much in the general or in the municipal equalization funding. Item number 4 looks at spending. So here we're looking at your governmental expenditures, and on a per capita basis, you can see how that's trended historically. The general government, you guys kept it pretty even compared to where you've been historically. You also run below where your peers average in that category. Under public safety, you guys had an increase compared to last year, and you run a bit ahead of where your peer group average runs. Public works held pretty even. That runs a bit ahead of the peer group average. And then environment and leisure. That one had an increase this year, also runs ahead of peers. It's hard to compare. There's no set thing that says because your costs run ahead of peers that it's either right or wrong. It looks at what's prioritized in a community. It also looks at what services you guys provide. You guys may provide more in the way of environment and leisure, the full gamut, than what some other communities your size would cover. But that's just interesting to know. Yes, your revenue was up on the governmental side, but your cost per capita run a bit ahead of where the peers average as well. So it puts that much more pressure on the governmental revenue side of things. Finally, on that page, we've got your outstanding GO debt compared to valuation. And here, anything less than 3% we say is excellent. You can service your debt. And you can see that you guys came in at about 1.5. So you're in excellent shape as far as having the ability with your valuation to service the debt that you have outstanding, the governmental debt. Item number 6 looks at unassigned fund balance compared to general fund expenditures. So here we're looking at how much unassigned, or basically unrestricted, unreserved, uncommitted type fund balance do you guys have compared to what it costs to operate your general fund this past year? And as a rule of thumb, we'd like there to be about 1/4 of the year, or 3 months worth. You guys had about 7% of the year covered. While that was up, last year you didn't have any unreserved. You've shown some improvement, but that's an area that we would like to continue to see improvement so you can build up that unreserved general fund side of things. Item number 7 looks at the month's expense in street cash. And so here, the target is keeping that at or around 12 months. You guys had about 3 years worth, or about 36 months in that street cash. Now, it's kind of hard to gauge that because a couple of years ago, the state went away from requiring that state financial report where you had to turn in the street cash. And so what we've done is merely continued the balance that you were at the last time you filed that report, add on the highway allocation, add on the 1/4 local match that you have to make, and subtract off the street expenditures. And that's where we arrive at that 3 years' worth of street cash. But it's all part of your general fund, so it's kind of hard to discern sometimes exactly what you have there. Item number 8, and so on that same subject, we are showing that cash balance as restricted for street purposes, but it's inside your general fund, okay? Item number 8 looks at your levy compared to both history. You guys have been very consistent in your tax levy, and then also compared to your peers. So here on that first line, you can see your general fund. Your peers run about 31 cents levy, and that's where the municipal equalization is less than your peers because your general fund tax asking is lower as well. You guys also have an airport levy, a pension levy, and then also debt service you can see there. So the total levy comes in at about 0.51. The next item, item number 9, looks at your net depreciable capital assets. So here we're looking at how depreciated out are your capital assets. And anytime you get under about a third or 35%, that's a warning sign that there's going to be some pretty significant cash required to replace some of those capital assets coming up. And you can see your governmental fund is right there. It's right at that 35% level. And so that's saying, hey, we'll probably need some cash in the near future to replace some of these capital assets. You can see your business type or your utilities are at about 42%. So there's still some room in there, but that's always something that we're wanting to make sure we've got adequate reserves and adequate operating margin in the utilities in order to have that replacement cash. So that brings us to number 10, where we look at the operating margin for your utilities. And here our target is to hit about a 15% operating margin for your electric, water, sewer. You can see water and sewer are right there. They're at the target, whereas the electric's a little bit low. And that's been fairly consistent. Last year it was 7%. This year it's 8%. So that's something we want to watch and see if, do there need to be any rate adjustments? Are we going to have adequate resources to replace those costly capital assets down the road as we need to? Okay, item number 10 looks at your debt coverage ratio. And this compares the operating results this year to the debt principal and interest that was required this year. Now, you guys paid down some pretty significant debt in the water and sewer fund. You actually paid ahead. And so this comes in at 0.8 compared to the target of 1.5. But that's really because you guys did pay so much down on principal this year. So it kind of distorted that ratio. You've had good debt servicing capacity in the water and sewer fund. This year is just low because there was so much principal paid. Okay? Item number 12, the final item here, looks at what our target or optimal cash reserves. If we were to pick a number and say, based on your general fund operating expenses, as well as the anticipated capital replacement that this shows that you'll be needing in the near future, what would we say the optimal unreserved or unrestricted cash in your general fund would be? And optimally, we'd like that to be about a little over 11 million. You guys this year have about a little over $1 million or about 1.9 million on the general fund. And then you also, off to the left side, have budgetary stabilization of just shy of 2.4 million. So if you take that combined with the unrestricted, you have about 4.2 million of general fund cash. So yes, we're below the 11 million optimal number that we'd like to see, but you can see the prior 4 years, we didn't have any unreserved cash. So you've made some improvement, and that's something we just want to continue to see building that up till we can get closer to some of those optimal cash reserves. Okay, so some good progress there. And then finally, the last item on there is the business type. So the utilities, based on these same formulas, we'd say the optimal cash would be about 23 million, and you can see you're right there. So for the utility side, you've done a good job, and you've got some good cash reserves that have been built up. So does that make some sense? And you kind of see where those page numbers come in. Now I want to jump into the actual audit report with that kind of as a background. And then anytime you guys have questions as well, just feel free. Yes, sir.
Under item number 2,
Yeah.
charges for services, what does that encompass?
It's going to be all gamuts of governmental charges. So if it's environment and leisure, if you charge for your rec center, for the pool, anything that's charged as far as building permits, across public works, anytime there is rent or fees that you're charging, it encompasses all of those charges across general, public works, public safety. A lot of times the big dollars come in environment and leisure, as well as if there's ambulance fees or any charges that come through on the public safety side of things.
So that would or could include ambulance fees?
It does,
Okay.
yes.
Is that a big part of that, Dawn?
It's roughly 800,000 total, so it would be a fairly significant. And then, Marcy, would that also include garbage revenues?
Yes, absolutely.
Yes.
Good
Which
point.
may be-
Yes. You guys have your sanitation in the general fund, and so that also includes that. Where
Okay.
some communities carve that out as a separate utility, but for you guys, it's in your charges for services.
So really, that comparative number of 195,000 probably doesn't have a lot of significance the way we do things.
Correct, correct. As you compare to peers, that's where you have to take the differences in a community into account.
Okay, and then what is the municipal equalization under number 3?
Yep, that is a state, basically grant or state assistance that comes through to help even out communities and what they ask for in property tax dollars. So basically, as long as you're levying a certain amount of property tax, the state kicks in this municipal equalization. And so is that the best way to describe it?
And it is, it's a fairly complex formula based on, like Marcy said, your levy and population. And it bounces around, or it has for us over the past few years. Last year, we were up a little.
Yep.
But in looking at next year's budget numbers, it's gonna decline about roughly 150,000 based on a little slight levy change and population using the new census numbers.
It's kind of the municipal state aid. Schools receive some state aid, and this is the formula for cities to try to balance them out based on population, based on what they can levy for taxes. But if a community doesn't levy up to the average for the state in property tax, you get docked on that. And so you don't receive as much as if you would ask for X dollars a tax levy, then you receive more municipal equalization.
So if we do a good job managing our budget and we don't raise our levy, we get penalized.
Yes,
Yes.
that's exactly right.
That sounds like government.
Yeah.
Thank you.
You're welcome. Any other questions before I jump into the audit report?
Excuse me, I just had a couple questions.
Sure.
Couple numbers jumped out at me as you're going through there. Number 11, it would be the debt coverage ratio, the
Yes.
electric.
Okay.
We're at 1254, and your recommendation is 1.5?
It just says you have a lot of capacity for debt coverage
Okay.
because your electric fund really doesn't have.
So above is
that.
good thing.
Yes,
Gotcha, fair enough.
absolutely. You want to be at least 1.5 in order to service debt.
Fair enough, fair enough.
Absolutely.
And then jumping back 1 to 10, operating income, total operating revenue, the
Yes.
internal service fund, we have a negative 1.23. You recommend 10?
Yeah. The internal service fund is going to be your self-health insurance. And so that's hard from year to year, depending upon the claims. There are years that and it's a lot of estimation as well. So there's years that the claims that are paid exceed the dollars that have been charged or that get paid by the funds as well as the employees for their insurance. And this was a year where you guys actually had a deficit in that internal service fund. Your claims exceeded the payments that were collected. And so that's going to vary from year to year. As you look back, you can see kind of some bouncing, but this was a year that was negative. It's not something that you have to respond to drastically, but I know as you guys set your new health insurance rates and determine how much you're going to charge across, that will be taken into account.
Thank you.
Yep, absolutely. Any other questions before we jump into the audit report? Okay. As I mentioned on page 3 of the audit report, that's where our opinion is shown, and this is an unmodified opinion, which is always what you want when you go through an audit. There's a few pages up front in the audit report that's called the Management Discussion and Analysis, and that's really the only place that you're going to see in print comparison numbers laid out side by side compared to last year. So on page 8, for instance, you can see your assets, liabilities, and net position compared to the prior year. And what you see are your total assets held relatively even, your liabilities went down, and your net position or your equity went up. So liabilities and equity are trending the direction you'd like to see. The next page, page 9, shows a comparison revenue and expenses. This is for the governmental side of things. So as you look at this, you can see that your program revenues in that top table were up about 6.2 million over last year. Meanwhile, your program expenses increased about $1 million over the prior year. As you drop down into that table at the bottom, that's all the sources of revenue for the governmental side. You can see that your operating grants and your capital grants were both up. This year, you guys had received the police presumptive payroll grant. You also received the ARPA grant in there, and so those both drove those categories up. You received some bus funding from the federal government, so that was some additional capital grants that were received. You'll see under sales tax, that was up about $1 million over the prior year. And then finally, transfers. The transfers that came across from the sewer fund to the special assessment fund to pay their share of project costs, that rolled in, and so the transfers were up compared to the prior year as well. So overall, total revenue on the governmental side was up about $10 million from the prior year. Transfers, grants, and sales tax being the primary increases. Page 10 shows the same thing for your utility funds. So on page 10, you can see the program revenue was fairly even compared to the prior year. The expenses show an increase of about 1.1 million, but you need to look at the first subtotal, which is the actual operating expenses. Those were actually down 800,000. It was the transfers that were up. And again, I mentioned the sewer fund transferred those dollars across to the assessments. So that's all good. Page 11 and 12, the bullet points at the bottom of 11, continuing on to page 12, show the capital assets, the significant capital asset purchases during this last year. So you can see there were several projects that were going, continuing on to page 12. But as we look at that first table, here we're looking at net depreciable capital assets. So governmental, if you compare the two governmental columns, you'll see that the governmental capital assets are down compared to last year. So this tells us depreciation outpaced the dollars that you put into capital in the governmental funds. You can see the utilities or the business type held fairly even. So the depreciation and reinvestment were about equal this year. The bottom table shows your debt outstanding, both governmental as well as business type. Your governmental debt was up. You guys bonded some things that were previously on warrants in the assessment funds. You also issued $575,000 of public safety bonds during this past year. And then on the business type, you refinanced some bonds, but at the same time, you paid off some significant principal when you did that refinancing, and so the debt is down on the utility side of things. Okay, now we get into the main body of the financial statements. On page 14, we see your overall statement of financial position, statement of net position. And one thing I didn't mention when I was in the opinion, we do have a paragraph in there that talks about excluding the component unit. So these financials do not have the airport authority included in them. I think last year was the first year that we went away from including them as a separate, discretely presented component unit. There's another audit firm that does those financials, and that way we don't have to hold up the release of the audit report until the airport authority's done. So I just wanted to point that out. If you read that, what's excluded, it's the airport authority. They'll issue a separate, totally separate report. But this financial then shows everything but the airport authority. And here you can see the capital assets shown kind of the top third of the page. Net capital assets for both business and utilities come in at about 99 million, 98.9 million. You also on this financial see the debt under liabilities, both current liabilities as well as long-term. 3.7 of current, 29 million of long-term. So you can see the outstanding debt is shown there. So that brings us to net position. The net investment in capital assets, that 65.3 million, are your capital assets net of any outstanding debt. That's the extra stuff really that shows up on these financials compared to just the more current view that we'll see as we get back into the body of the financials. On page 15, we've got the statement of activities. And here we start out with, expenses by function. So you can see general, public safety, and so on. We lay out any direct revenue sources. So whether that's charges for services, operating grants, or capital grants, those all get subtracted off those expenses. And it brings us over on the right-hand side of the page under the governmental activities column. You can see a deficit of 18 million. So this simply says this is the cost of operating your governmental activities above and beyond any direct revenue sources. And that's what your property tax, your sales tax, any transfers that come from the business type activities, those things have to cover the remaining costs that are not direct revenue sources. And so that's kind of a key number for you guys to know, hey, what's left over after we have our grant funding and our charges for services that we have to cover through other general revenue sources. And so the general revenue sources are shown at the bottom of page 15. Okay. Then we get into just the individual fund statements, and the general fund is always a key thing to look at on page 16. We can see your general fund had total assets of 7.4 million. And so that sounds really good, but then we have to look down under the fund balance category to see what of that 7.4 million is restricted or committed or earmarked in some way for a certain purpose. And so that's shown down here. You can see what's restricted for streets and the bridge buyback program, as well as industrial development. Budgetary stabilization, I'll just take a minute and explain that. What that represents is the amount that you guys budgeted, your general fund cash reserves would decrease. When you set your budget last year for the 9/30/22 year, it said general fund cash reserves would decrease 2.3 million. So that's what budgetary stabilization is. We don't anticipate you're going to spend all of that, but if you did, that much of your fund balance will be gone, and we are left with what's under the unreserved fund balance or unassigned. Okay, so we always feel it's important to carve that out and just say, hey, this is what's in your budget to spend general fund cash reserves down, just so people don't lose sight of that. Okay, then we get into the other major funds, your assessment. The municipal golf, this is the last year that will show. That's always been shown as a major fund, but that, of course, was zeroed out during this past year. Your debt service shows there. And then the column titled Other Governmental Funds is 14 smaller funds, the non-major funds. The detail of them are back on page 76, but they all roll up into this Other Governmental. We'll see that as we get further back in the financial. The revenues and expenses on page 18 are for your governmental funds as well. Same thing here, the detail of that will be on page 77. So the 14 funds that roll up into those totals are shown back on page 77. Couple of things to note as we look at the general fund, third line from the bottom. The increase in fund balance was 4.1 million this year. Now included in there, you've got some transfers that have come across, but this year you guys had a $4.1 million increase in that fund. Your assessment fund, a positive 10 million. Now, it's a little bit unique in the assessment fund because bond proceeds, when you're looking at fund statements, show up in the revenue. And so while 10 million seems really strong, a good chunk of it, you can see up under the revenue, is 6.6 million of bond proceeds that were issued. So you always want to kind of take that into account. That's going to need to be paid back. And then also in that fund, you had the sewer transfer. So there was 4.4 million that came in through transfers. The municipal golf fund, you can see zeroed out. You've got your debt service, operated and covered its obligations. And then the other governmental funds, we'll see the detail as we get further back. Your business types, starting on page 20, you can see your assets, liabilities, and equity for the business type funds. And so electric, water, sewer. I like to look at page 21 where we see the revenues and expenses. In the center of the page, that operating income line, that was that 15% target that we're shooting for. And so remember, your electric was about 8% of operating revenues. where the others were covering the 15% ratio. But that's kind of that key that we want to target into and try to, over time, achieve that 15% ratio. From here, I'm going to jump us back quite a ways to page 44. So a lot of the footnotes that I'm skipping over are accounting policies, things that don't change a great deal, but they talk about the different policies that you guys utilize. Page 44, it shows the total demand deposits, your total cash and CDs came in at about 53 million. And as you flip the page, you can see those were broken down between the governmental and the business type funds. And then one more flip to page 46. On page 46, we say, yes, we have 53 million of cash, but keep in mind, 22 million of the cash and investments is restricted for some purpose. And so the governmental restrictions are listed out there, totaling up to 22 million. And then the business type are in the paragraph there. You've got 800,000 restricted for debt service and 386,000 restricted for customer deposits in the business type side. So always want to keep that in mind. The capital assets shown on page 47 are your governmental funds. And here, if you always focus on the addition column, you can see that you guys had 1.2 million of depreciation in excess of investment in capital assets. So that's where I talked our net decrease this year because depreciation outpaced additions. On the business type, which is back on page 49.
Excuse me, on the depreciation. Having some trouble understanding that. If we determined as a city that we needed less assets and got rid of some of them, would that be a plus for us because we would not reducing our our depreciation wouldn't be as much as it had been before?
Your depreciation wouldn't be as much. There would probably be some value to those assets if you sold them. And so you'd be converting those assets to cash, I would presume. And then, yes, you'd have less expense in the future. Depreciation doesn't take cash again. Mm-hmm. It counts as an expense, but it's not eating up cash a second time. But so when you look at your per capita cost that we looked at over here, that included depreciation in it.
Okay, thank you.
You're welcome. The business type on page 49 shows, as I mentioned earlier, fairly even. You guys had investment that exceeded depreciation by about 67,000, which is fairly small in a city this size. Your debt starts on page 50, and here we can see both governmental as well as business type. This shows the issuance of debt in the governmental side of things, but also some of that was refinancing and some of it was new bonds that were issued to pay off some assessment warrants. So it looks like a big number, but you need to take the deductions against that. Same thing in the business type. Due to refinancing, that's why the new debt was issued this year in the utility side of things. The debt service requirements, there's a lot of detail on the outstanding bond issues, but if you jump back to page 57, you can see the principal and interest requirements that will be there over the next 5 years, and then in 5-year increments thereafter. This is just a nice spot to look at what kind of cash flow is going to be required in all these categories in the near future. We've got the registered warrants. You can see were paid down almost, well, 700,000 on page 58. You started with 10 million at the beginning of the year, and with debt financing as well as the sewer transfer, got those paid down to about 700,000. From here, I'm going to jump us back to page 69. And page 69 just gives you the detail of the outstanding economic development notes. You guys use modified cash basis for your fund statements, and so these notes receivable are not shown in the governmental assets, but this does detail out the outstanding debt under your quality growth fund. And it continues on to page 70. The two listed on page 70 are forgivable loans, but you can see the loan balances for each of those projects. And then on page 71, we've summarized the TIF proceeds that came through during this last year. So those total about $211,000 for the year ended 9/30/21. And then finally, the bottom of page 71, some subsequent events. So there was a lot of things that took place after September 30th, but before the audit report was issued. And this just lists some of the larger capital expenditures, some of the larger commitments that you guys approved as council during that time period. We've got budget versus actual starting on page 72. I'm going to jump back through that. That's pretty self-explanatory. And point you to page 76. And here's that detail of those 14 funds that I mentioned that all roll up into the other governmental. So you can see, there's some significant activity, but they're not considered major in the large scheme of things.
Hey, Marcy,
Yes.
can I ask, the city's, fund for the health insurance or self-funded,
Yes.
about 4.4 million, where does that show up in the report, or where's?
That shows up as part of the business type activity, so the assets for that are shown on page 20. It's clear off to the right column. So for whatever reason, governmental fund accounting says in your fund statements, those show as their own column, clear to the right on the business type. And then they get rolled into the governmental when we roll up into the main body of the financials. But here you can see you had total cash of about 3.8 million at the end of the year in those internal service funds. And then the revenues and expenses are shown on page 21 for those.
Okay.
So 7 million in and 7 million out for that, so.
All right, thank you.
You bet. All right. And then continuing on page 77, you've got your other governmental revenues and expenses. We've got 10-year levy history showing on page 78. And you can see the last several years, you guys have kept that levy just constant with the .44. And then the last several pages are, oh, sorry.
Sorry,
yes.
you got about 5 minutes, just so you know.
Okay, thank you. I wasn't looking for your signal, was I?
No, you were looking down, I was going like this, and the audience were wondering why I was waving at them.
Thank you. All right, and then the last couple of pages are the single audit report. So you guys received more than 750,000 of federal expenditures, and so this summarizes the federal grant activity. This year, the transit program was the major program, so that's where we dug in and did the additional detailed testing to make sure the federal compliance requirements were all met, and so that all came out very well. We had a couple of findings that we listed in there. One is just segregation of duties. As you guys are a smaller organization, limited number of accounting personnel handling things. And so that's where we just remind you each year, be aware of that as council, be aware of that as you're reviewing your claims. And then the other item that we had was just this year, we could see the strain on the accounting department as far as being able to keep up. So recommendation there, they got a little bit behind, and so some of the adjustments they made for us, but it was a little bit later in getting that done. And so I'm sure they would love to find another person in that department, but we would endorse that as well, just to get the personnel shored up so they can catch up and stay caught up, so you guys can have accurate and up-to-date financials at each meeting. Okay? All right, I'm going to turn it back to you guys for questions. We've issued a letter of comments, but I want to make sure that you guys have the opportunity to ask any questions. So I'm not going to go through each of those comments in detail. A lot of them carry on there from year to year, wanting to make sure we're utilizing the internal audit department, some of those things. But I want to take a moment and have you guys ask any questions that you have, so we make sure we can cover that. Yes?
Yeah. Marcy, on the corrected and uncorrected misstatements 1 through 5, were those just items that we ended up kind of working through with you guys to finalize in our financial statements as part of the audit process, and so they get noted since they were completed as the audit was completed?
Yes, so number, let's see, I'm on the wrong page here. Yes, number 2, for instance, was one that we did as we were here. That routinely is done before we get here, but it was, again, just the timing. A lot of the adjustments we did not count as audit adjustments if Dawn handed it to us.
Okay.
But a few of these, like the warrants payable, are always an audit adjustment. You guys account for them as revenues and expenses. We adjust them through the balance sheet. So these are routinely annual adjustments to adjust your cash basis statements to the accrual side of things.
Okay, thanks.
You bet. Any other questions? Well, thank you so much. I appreciate you guys' time, and we are always available. You know, Dawn can contact us, Lane. If you have questions, don't hesitate to reach out.
Thank you very much, Marcy. We appreciate you being here.
Thank you.
Take a moment to thank Dawn, her team, as well as all the city administration and managers for, it's all their hard work that makes us produce this really nice audit report and this fantastic budget. So it's easy for us and it's a lot of work for them. So thank you very much for all your efforts. We really appreciate it. Thank you. That being said, this meeting is adjourned and we will reconvene as a city council in about 5 minutes. Thank you.